Bulls are on a rampage. The Fed has given steroids to global stock markets by pausing on interest rates. The Sensex and Nifty are at an all time high and they are making new records nearly every day. So, is your portfolio reflecting the euphoria? Are you holding the stocks that are hitting 5%, 10% high every day? If not, then this series will guide you on the common mistakes we all make during the charge of bulls, which either does not help us earn money as much as we can in these runs, or maybe even suffer losses at times because we might buy at a high price. And as soon as we do it, the markets crash. I'll talk about certain situations I've been through in the last few years, especially in 2023, where I've tried to salvage my positions, got rid of few of them. I'll explain using my personal examples, and I hope that this video will help you taking the right decisions in the bull run and hopefully make a lot of money in the times to come. In equity market, you only make money when you buy low and sell high. If your portfolio is not at an all-time high, then you probably have either of the following five symptoms. Either you exited too early, or maybe you think that the market is overvalued, you want to buy when the market corrects maybe to 18k, 16k. It could also be that your portfolio is running steadily but slowly, which means that your stocks have not run up as much as the market has. You might be caught with FOMO now, buying now in bulk or in SIP mode. It could also be that you think that markets are crazy, these levels are not what you can understand, and you just moved out of equity to an alternate asset class. In the first video, I'll talk about the Russia-Ukraine crisis. And we all know what happened in the last year since Russia invaded Ukraine. The prices of energy across Europe went through the roof at that time. The power was really costly. There was crude which was boiling. Most countries banned production of glass that requires soda ash. I thought that maybe this is an opportunity for India. There are two major companies. One is Tata Chemical, the second one being DCW. Tata Chemicals was already costly. I thought that let me try and take a bet on DCW. So I bought a bit of DCW in anticipation of prices going up, because DCW will get orders and there will be higher margin possibilities because there will be huge demand internationally. So accumulated the stock, started the wait period, gave it some time. Another major thing happened. Turkey had a major earthquake. And what I saw in the news was that a lot of industries were flattened, and the news said that it will take about a year for the industry to restore itself. Turkey is a major manufacturer of glass again. So I thought that this is a good opportunity further, and I increased more in terms of the quantity on DCW. The rationale seemed good. It's a decent sized company, good company, managed well. It had gone up significantly around the pandemic as well. So I thought that okay, now I'll give it few quarters and probably make 30-40% kind of gains. One thing I was not prepared for is what could go wrong in this plan. Europe's demand is okay, India's capacity is okay, DCW going to meet those demand is okay. What I was not prepared was the slowdown in China. The last impact of pandemic was on China. China was closed for significantly longer towards the end. There was no demand coming from China, and as a result, not just glass but even things like soap which require soda ash, the general demand for soda ash, considering the size of China, that went down significantly. What that created was overcapacity globally, and the opportunity I thought was there actually did not bear the fruits, and I actually remained below my buying price for a significant time. And at one point of time I just thought that okay, I'm just my money is stagnating. I booked the losses, I got out. What happened was the next week the market went up. DCW also, I think it was nearly hit a upper circuit. Reading was right. China was not something I expected. And again, I became impatient. I sold at the wrong time without doing much analysis. I wanted to rescue my money. So there were few costly learnings for me from this episode. The first one was that you might create theories, but theories go wrong. Market has no obligation to meet your theory. So always have plan B. Do okay analysis. You think what is gonna go right for the stock, but also why your theory could go wrong. Is there a plan B? what happens if the market or the stock does not behave the way you wanted? Will you bail out the way I did? Will you wait longer? Do you want to average lower and accumulate huge quantities? The general philosophy for me now is that a small cap like DCW, I won't probably have more than 5% weightage in my entire stock portfolio at all, ever. By the way, DCW is still a great company, and if I accumulate it now, then I might make money. But the market's at an all-time high. I'm not sure if I'm gonna accumulate it at this stage. Now, I don't know whether the markets are gonna go up or down. No one knows.